So what's the best time frame to use as a day trader or as a swing trader? What's going on, team? It's Ricky here with TechBud Solutions, here with another video. Make sure that if you guys are new to the channel, that you guys subscribe and turn on those post notifications. And if you learned something new, I really hope that we earn your thumbs up and that you absolutely smash that like button. So what we're going to be talking about today is time frames for beginners. I've made numerous videos like this before, but we've gotten this question asked so often recently. I just thought I'd make a more in-depth video. So what I'm going to do is I'm going to break it down on the whiteboard, and then we're going to jump on into my screen, and I'm going to give you a real world example for a day trade and a swing trade. I want to make sure that you guys all understand that what I'm sharing with you today is simply based off of my opinion and in my experience of what works best for me. I'm going to be using a series of time frames both on the length of the candle and also the number of days based off of the overall charts that I use. If you use a different time frame, all you have to do is share that down in the comment section and why you find that time frame to be more effective than what I should. And again, with the simple idea that there are many different ways to still get that same end result. So one of the first things that I want to start off is for intraday plays, which pretty much means like day trades. One of the things that I really focus on is you need to understand the reason on why you're using shorter time frames. And for those that are a little bit new to trading in the stock market, when it comes down to taking advantage of day trades, you're taking advantage of opportunity that is presented to you within the day. So therefore, you have to make sure that it makes sense and that you only take advantage of opportunities that you personally see value in. And the reason that I find it to be more effective as a day trader to focus on shorter time frames is if you're taking advantage of opportunities within the day, looking at patterns that happened, 100 days ago just aren't as relevant. I'm not saying that it's not useful. All I'm saying is that the more relevant or the more recent a specific price point or pattern might be, the more useful it might be to whatever it is that you are trying to take advantage of within that specific day. So what I broke down for you here is within intraday plays, I personally like to use the 1 day 1 minute, the 1 day 5 minute, or the 2 day 5 minute, and also the 1 hour time frames. The thing that you have to understand is that when it comes down to time frames, an example is the 180 day 4 hour time frame is a very popular one we use in the Sunday Stock Talk. 180 days is pretty much the overall timeline that I get to see on that chart, but the 4 hour is the length of each candle. So what I specifically like to use for intraday plays is the 1 day 1 minute, or the 1 day 5 minute, or the 5 day 5 minute, or the overall 20 day 1 hour. These are specific time frames that I'm looking at that, again, if I'm trying to take advantage of an opportunity that I see presented to me on natural gas, it's going to be more important for myself as a day trader that's trying to take advantage of an intraday play on a shorter time frame rather than, again, looking 1 year back and seeing if we're at the same resistance level. And when it comes down to the overall timeline that I personally like to look at, again, I like to really focus on anything in between the 1 day up until 20 days. That's almost as far back as I want to look when it comes down to intraday plays. Again, that's just an example. One of the things that I want to remind you is if you're approaching 180 day highs or 180 day lows, you can look as far back as you need to for you to be able to identify a previous support level or previous resistance level. All I'm here to share with you is, at least in my experience, the more recent a specific time frame is, especially as a day trader, the more relevant I find it to whatever it is that I'm trying to take advantage of that specific day. So moving on into this is going to be for long-term plays. Again, this could be viewed as swing trades or overall, again, long-term investments. One of the things that we love to remind our investors is trading in the stock market is much more different than when it comes down to investing in the stock market. Your overall approach, in a sense, should be different as well. One of the things that we want to cover is when you're trying to swing trade something and take advantage of those specific opportunities, one of the things that I take into consideration is I focus much more on consistency and overall direction, because you're holding this specific stock overnight or for a number of days, for a number of weeks, or for maybe a number of months. So taking that into consideration, I'm not going to just focus on 1 day worth of patterns, right? I'm going to make sure that I look a little bit more in depth into how that specific stock has been trading, just to make sure that I'm doing my part, that I am aware that maybe for the past 180 days or for the past year, how it's been performing. Has it been bullish? Has it been bearish? Is it overbought? Is it oversold? And again, I can do a much better technical analysis when it comes down to looking at these longer time frames. And again, that is 100% just preference. So this is on the 4-hour time frame, or the overall 1-week time frame, or the 1-month time frame, and the overall length of how far back I personally like to use. This is just an example, and I forgot to add the 0 there, but this is the 90-day to overall 180 days. But again, when it comes down to looking at long-term investments, especially as we're recovering from this, overall pandemic, you can look as far back as 1 year, 3 years, 5 years. One of the things that we want to remind you is there's many different ways on how you can approach something and still get the same end result. You should never be told that, hey, don't look as far back as 3 years. It is your job to try to take advantage and try to make sense of an opportunity. And if that requires you to look back 3 years or 5 years so you can identify a previous support level or a previous resistance level, so be it. But at the end of the day, at least in my experience, I just want to make sure that you understand that definitely the more recent that pattern or that support level or that resistance level was presented, the more relevant it could potentially be. I just want to cover a couple points before we jump on into my screen. I want to make sure that every single time that you guys are performing a technical analysis, especially if you're watching this video, you need to make sure that you have some form of plan. It's great to be able to take advantage of opportunities, especially as day traders or swing traders, but you need to make sure that you're not always just thinking on the offense of how much money you can make, because again, when it comes down to investing or trading overall, there's always some form of risk involved. So you need to make sure that you have a plan and that not only you focus on the offense, on the profit, but also on the defense and how much you are willing to, in a sense, risk, where your risk management is going to be, to make sure that you have some form of stop loss or overall risk management in place. So the second thing that I want to cover is, again, I've tried to repeat this over and over again throughout this video. It's the overall idea that recent just tends to be a little bit more relevant with the overall concept that when it comes down to intraday plays, I'm going to be looking at overall lows and highs within maybe the 1-day 1-minute chart or the 5-day 5-minute chart, but I might not be looking as far back as 180 days just because they're not going to be as relevant as that previous resistance level is just not as recent, right? And what the last thing is that patterns tend to repeat themselves. They do not always have to, especially as a technical trader. It doesn't matter what time frame, it doesn't matter what indicator, it doesn't matter what pattern you potentially see. The thing that you have to get through your head is that patterns tend to repeat themselves. They do not always have to. So just make sure that you do your part in having some form of risk management in place to ensure that you set yourself up for success. And without further ado, I want to give you a real world example. Let's jump on into my screen and let's break down a couple stocks. All right, so let's make this short and sweet. I just want to give you a real world example of why it's so important to understand what timeframes to use depending on what your intention is. So as a day trader, I wanted to take advantage of opportunities for UGAS and DGAS. And one of the things that became very clear is when I performed a technical analysis, even during the pre-market session, recent can mean more relevant. And with the overall idea that every time that natural gas tried to push up above 1.94 to 1.95, it always got rejected. So I identified 1.94 and 1.95 as a resistance level. And the reason that this was so important is because now I know where natural gas gets rejected, I then can have a better understanding of where to buy degas for the dip to then be able to sell it for a profit. And it's this exact approach that allowed me to go from being red on the day to being green on the day. And I was red a couple $100. I ended up the day at $426 profit and all positions closed. And one of the things that I wanted to ask you is, how useful would day trading UGAS or DGAS be if I was looking at the 180-day 4-hour time frame? It just wouldn't be useful, right? Because this just tells me so much more than I need to know based off of what my current intention is. As a day trader, I want to focus on recent patterns, and as of right now, this is just too much. Obviously, if I wanted to swing trade or go into a long-term position, which I would not recommend for an overall triple leverage ETF, but the overall idea of if I wanted to perform a technical analysis and see, hey, is right now a good time to buy DGAS to sell it 3 weeks from now, I have much more data in which I can analyze to make a better assumption. There's never a perfect assumption, but I can at least have more data to, in a sense, perform my technical analysis, and vice versa, right? When it comes down to an intraday play, I have what then I need to take advantage of an intraday opportunity. One of the things that I want to end this video with is, I have specific time frames that I use. I use the 1-day 1-minute chart, 1-day 5-minute chart, 2-day 5-minute chart, 5-day 5-minute chart, 180-day 4-hour chart, the 1-year 1-day chart. There's so many different time frames. What I want to empower you to do is that just because I trade on the 1-day 1-minute chart specifically doesn't mean that you should. I have noticed that different stocks and different focuses are more useful on different time frames. So make sure that you are someone that is empowered to try new things. Don't be scared to see if trading on the 1-day 5-minute chart is more useful for you, right? Maybe the indicators are more accurate. Maybe the support and resistance levels are more clear. There is no one specific time frame or one specific indicator or one specific pattern that will ultimately lead to your success. The very challenging part about the stock market is that it requires problem solving, especially as a day trader. So be empowered to be your own person and to solve those problems every single day, right? Like we've said so many times before, the beautiful thing about the stock market is how challenging it is. But it is, I think, why so many people find it so rewarding when you do find success and end up with, one of these green days. So let me know in the comment section what you guys think. Also, don't feel scared to share in your own opinion which time frame you find most effective and the reason why. And I'm sure someone, a beginner watching this video, can definitely benefit from that. So I really hope that we earned your thumbs up if you guys learned something new. Don't forget to smash that like button and don't forget to stay connected. We do run the largest and free Facebook group in the world with over 274,000 members, and that's gonna be that first link down below. I'm gonna be trading live tomorrow, and if you've ever wondered what it's like to watch me trade live, click the second link down below, learn a little bit more about the Learn Plan Prof group, and if you wanna get a taste of what it's like to watch me trade live, scroll down, watch this video, and maybe you can join our team and watch me trade live as soon as tomorrow. Really do appreciate you guys' time, and like always, let's make sure that we end the year on a green note. Take it easy, team.